You know, we're also going into day 3 of the RNC. A lot of people are talking about the quote-unquote Trump trade. How much of this rotation into other names do you think is part of that Trump trade? How much of it is just many portfolio managers are over-positioned when it comes to tech?
Well, it's hard because you were left behind. If you didn't own Index Weight Plus, it was very hard to beat the S&P 500, which is the main benchmark. So I think you're overweight. I think you could see some profit taking, but I think a lot of investors and a lot of portfolio managers are going to look at the tech trade and say, look, this is where we see growth coming from, and we still think it's above market growth, and we want to hold these names. As for the Trump trade, I mean, you've seen a lot of that get priced in the last week. I think the big one's going to be tariffs in China. Obviously, J.D. Vance has some pretty strong opinions on China. And so for us, that's what we're looking at, who's exposed to Chinese revenue. I think we still would support Taiwan. You know, some of this stuff, you got to realize it's an election year and that you're going to hear a lot of crazy things between now and November. And I strongly do not think you should position your portfolio at things you hear during campaigning, because that's often not what turns out to be what happens after November.
CJ Muse, the renowned analyst of Cantor Fitzgerald, is bringing good news to every Nvidia stock investor and enthusiast, as he expects Nvidia to beat all the predictions and go far beyond even the most positive expectations when it comes to earnings. This prediction is a result of Nvidia's continuous innovation and the robust demand for its products. In fact, Muse expects semiconductors to profit most in this year's earnings, with definitely Nvidia on the top of the list. But what made him believe so? That's exactly what we will go through in today's video. So please, don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Welcome back to Squawk Box. As demand to power artificial intelligence applications is soaring, a New Jersey-based startup, CoreWeave, is rapidly building data centers across the United States and Europe. Joining us right now in an exclusive interview to talk about it is Mike Intrater. He is the co-founder and CEO of the company. Good morning to you. We're all trying to just understand, I mean, by the way, we just had this news from Trump, which I want to get your thoughts on, given the chip piece of this.
Yep.
But how quickly this market really is growing, what it really, really looks like, and I would actually even throw into this the energy it takes to power these things.
Yeah, so first of all, thank you for having me. I appreciate the opportunity to speak to you and the audience. In no particular order,
Yeah.
You know, the market that we are seeing, and we are very close to the true demand for this infrastructure, is relentless. It has been in a state of severe disequilibrium for the past 2.5 years. And in our planning and in the planning that we are being driven to do by our clients, there is quite a bit of runway still in terms of what the build is going to look like and how much capacity.
What does the runway look like to you?
Well, the runway looks like to us based on time, not on volume, right? And I always think about that from the perspective of a market that can't tell you how much they want, but will say, I want everything through this date.
Muse said that AI-leveraged names are still the most attractive to own heading into earnings, with Nvidia being his top pick, taking into account the most anticipated release of the year, Blackwell. He also added that despite the fears of a bubble, he loves a healthy degree of skepticism, suggesting that it's important to be aware of potential risks and not get carried away by hype, even if the overall outlook remains positive. Moreover, the analyst stated that AI spending remains as robust as ever, and Nvidia's numbers are just going to continue up and to the right. Investors are typically paid owning Nvidia into a product cycle, and the upcoming Blackwell chip is the mother of all products. Muse's words couldn't be more accurate, as the AI industry is thriving currently. At the time of this video, it stands at $184 billion, and it's projected to reach a shocking $826 billion by the year 2030, which would definitely benefit Nvidia most, whose chips are running a very large portion of this newborn industry. On top of that, his words reflect an admiration of Nvidia's stock, as it implies that investors generally see good returns when they hold Nvidia stock through the development and release phases of new products. Furthermore, describing Blackwell as the mother of all products highlights the extraordinary importance and potential impact of Nvidia's current product cycle. This suggests that the products NVIDIA is currently developing or releasing are expected to be exceptionally influential and successful, driving significant growth for the company. Muse believes that NVIDIA has a very high chance in achieving the milestone of $5 earnings per share the next year, which undoubtedly makes the stock extremely appealing to investors with its current price. For context, FactSet's consensus estimates project only $3.59 in adjusted earnings per share for next year, up from an estimated $2.59 for 2024. But why is Blackwell such a big deal? Let's find out. Hello, everyone, and welcome back to Investocracy.
The timelines for access to the chips are being governed by two things, right? The first thing is new generations of chips that are coming out.
Right.
And the second piece is the capacity to be able to have enough physical infrastructure to bring that compute online.
Okay.
Those are the drivers of when you're able to deliver
are you just like NVIDIA only, or what's your story?
We allow our clients to kind of lead us, and so we are one of the true resources for delivery of NVIDIA's infrastructure.
What else are you buying? Who else is getting your money?
So we buy all of the different types of silicon and look at them from a performance perspective. But at the end of the day, we are delivering what our clients want, and our clients want NVIDIA technology.
Okay, they don't want the other stuff.
They do not want the other stuff from us. And it may be self-selecting. They know that we're really good with the NVIDIA stuff, and so they're coming to us for that type of build.
Right.
But the reality is overwhelmingly, I can't build the infrastructure to deliver the NVIDIA-based solutions because I don't have enough physical infrastructure to build that in. So it's hard to tell for me what other demand there is because I can't get through my own demand, my NVIDIA-based demand.
The new revolutionary chip, Blackwell, is expected to be released later this year, with a new revolutionary architecture that involves unprecedented features. It will handle double the compute and model sizes of its predecessor. Its next-generation NVLink offers high-speed communication between as many as 576 GPUs. And AI-based preventative maintenance optimizes system uptime, and this is just to mention a few of Blackwell's features. Therefore, the demand for such a game-changing system already is surpassing supply, and NVIDIA expects this to continue into next year. But that's not all of it. NVIDIA's CEO, Jensen Huang, said that the company will have other more advanced chips coming each year, and the current one is just the beginning of a new revolution that's unfolding in the AI industry. Huang stated that the company is on a one-year rhythm of innovation. This reflects NVIDIA's consistency in maintaining the same certain level of brilliance, bringing fresh and cutting-edge technology to the market annually. So, what does this mean for NVIDIA stock? Let's answer this. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We've got to start with the chip stocks under quite a bit of pressure, including Nvidia down just about 3% last time we checked. How do you see that impacting the markets overall, specifically the NASDAQ?
Well, right now we're going through a huge rotation, right? Smalls are running fast, value's running, and you're seeing a little bit of waver in the growth. For me, it's a bend, not break trade. I see this as a breather after a massive run up. Plus, you had Trump's comments on Taiwan that kind of spooked the markets. Could there be more tariffs coming? So for me, I see this as a breather. You could face some near-term tactical headwinds in chip stocks, absolutely. But again, I don't think the trend is broken. So if you have large gains and you're in a taxable account, you need to be thinking, do I really want to dump my Nvidia? Do I really think Nvidia is dead? For me, no. Pullback, consolidation, under pressure, looking near term, small in value, running, chip stocks kind of lagging behind. But I don't want to sell them necessarily because I still think we're in middle innings of the AI play.
All of this means that NVIDIA will keep its position in the long term due to the rapid and unmatched pace of creativity, which makes it so hard on the rivals to compete fiercely with NVIDIA. The firm has even widened its interest from solely chips to full computing platforms, which basically means that if customers invest in the company's software stack today, they will keep benefiting in the upcoming years from the products that will keep coming out one after another. So, If you're an Nvidia stock investor, you should know that Blackwell will definitely boost Nvidia's stock the moment it's released, moreover, in the quarters to follow. But that won't be the end of the company's astonishing growth story. Other innovations in the years to come will definitely act as new catalysts for revenue and share price growth. On top of that, Nvidia's recent supply chain expansions will level up the company's revenues and profits, as the latter has secured partnerships with semiconductor manufacturers, foundries, and other crucial players in the tech industry, such as Micron Technology, Foxconn, Samsung Foundry, and ASML. Additionally, Nvidia has pushed the manufacturers to improve their technologies, increase the pace, and enhance the production facilities in order to get a significantly bigger amount of chips produced. So, with all of these givens, Nvidia stock without a single doubt seems like a great investment, even after the pullback. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.